Good morning, everybody. Welcome back to the Schwab Coaching Channel. It's our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from, as usual, a beautiful Denver, Colorado. Today, pleased to be joined on this Wednesday by my friend and fellow coach, Brent Moores. Good morning, Brent. How are we doing today?
Doing good, Kevin. I'm glad to be here with you.
And I'm glad to have you, of course, because getting an opportunity to talk about the market is one thing, but doing it with a co-host and providing a conversation about what we're seeing, I think, conveys a little bit better for our viewers. So I'm glad to have you. Certainly glad to have all of our viewers there today. I see plenty of familiar faces. Our friend Barb Armstrong is managing chat for us today. You can say hey to her. She'll certainly answer questions that Brent and I are unable to get to. You guys stay pretty darn active in the chat with us lately. I'd love to see that continue. So keep it up, everybody. As Barb is currently pointing out, the three of us are available on X for you. Love to have your follow there. We've been trying to get posts made there this week, though some of us have had some difficulty with our access. So just a heads up, you might not see as many posts in the last few days as we normally would, but have no fear. As soon as we have that access returned to us consistently, we'll be posting in there as frequently as possible. So follow there where you can, everybody. Let's get to disclosures, and then we're going to get into the conversation. Plenty to cover with you all today. So please remember that our discussion here is informational and educational only. We do not make recommendations nor an endorsement for any particular approach or strategy to trading the market. We do talk technical analysis in this segment, though, quite a bit. And in doing so, we discuss concepts and strategies traders may choose to employ. However, technical analysis is by no means the only piece of your puzzle, and we do not encourage you to base decisions exclusively off what you see in the form of technical analysis. Now, as far as our agenda is concerned, this is it. Standard day, everybody. We're going to hit the major indices for you and drill in to some of the short-term price action, because some of the moves we saw yesterday late in the day really provided a little bit of an inkling that we might have a longer, maybe more of a rally perhaps than we had expected. We'll talk around that, of course. So we're going to drill into a few different short-term areas, as I like to do, to give some of you short-term traders some levels against which maybe to base some opportunities. So hopefully some takeaways for everybody here today. So let's get right to it, Brent. Let's talk about that S&P 500. Made a nice move today. We are back, sir, above our 20-day moving average. That's not a negative, is it?
No, it's not a negative. You know, I think, Kevin, you can paint a positive picture or a kind of a negative picture on the market. Just depends on what you want. I mean, let's talk about the positive. Not only have we gapped up today, but we established a higher low, a pretty good higher low there a couple days ago from where from our market low, and that market low that we hit back at the very beginning of April, I think it was, it's held. So in fact, we haven't even really tested it that much at this point. So that's good news. We've established the higher low, and if you're going to have a trend change, if we're going to get an upward trend, it's got to start with a higher low. Now, I wouldn't call a higher low an uptrend in and of itself, but it's a necessary precondition there. Furthermore, today, we're above that 20-day as we now stand. I don't know where we're going to end up the day, but that's a nice gap up today. And a lot of, someone in this chat said, everybody's smiling today. Yeah, spring day, birds are singing. The market's up, 2.7% today?
Yep.
But there's more to it, and everything in the right world is not right again right now. Not that it's all right anyway, but there are some cautionary notes out there, Kev, too.
I think you're right, Brent. But let's talk a little bit about what led to this. So yesterday in the afternoon, there was some softening out of the Trump administration around tariffs, the plan for tariffs, and perhaps the administration's expectation that something on a trade deal is going to get done. And my encouragement is to try and parse those words a little bit more clearly. What did we get? What has changed in terms of expectations moving forward? And how could that impact us? And I think what it leads us to, Brent, is a little bit of relief why we're likely getting the bounce we're getting here today, why we have this nice little gap between yesterday's close and today's open, and us back above the 20-day moving average. And yet, Brent, has anything really changed in terms of our expectations, or maybe even in terms of our true uncertainty as it relates to this whole tariff discussion? Has anything changed in a material way?
No, I'd have to say no, not at this point. Part of the challenge for investors right now is that we just don't know. We're kind of trying to read between the lines, so to speak. We're looking at information we're getting, and we really haven't had much. And it's and people in their mind kind of go to a bad scenario often, and but no, nothing materially has changed. And let me tell you another thing that is affecting the markets here right now, and that is, I guess the White House has said, I think it was Scott Bessent or someone, I can't remember who, said, hey, there's no intention right now to try and fire Jerome Powell. And of course, that was causing some angst in the market as well. So, but yeah, no, we're not, there's no real tariff news. And let's be honest, the tariff uncertainty is the biggest bit of uncertainty that's driving the market right now. And that uncertainty has not gone away. It's just given a little bit more of a positive spin right now, that maybe there's some light at the end of the tunnel, but nothing concrete.
I think that's the takeaway, Brent. You're right. We've been talking about the importance of headlines and how we traders can keep an eye on headlines and how they can hinder and help us all at the same time. Depends on which side of the market you are on when that headline hits. So we look at this perhaps as an opportunity, and I'm going to pare back all of my commentary here, everybody, and just encourage you to think about what we have seen from the market since the selling has begun. We've seen a series of lower highs and lower lows. To this point, that has not changed. We need to see evidence that will give us reasons to believe in the short-term bounce we are in the midst of right now. So let's talk about some of those levels that are very important. Let's draw a trend line from the peak through the peaks that we have previously seen, Brent. If I did this, that coincides with still below that trend line. That stands out to me. As does the level from which we have fallen pretty aggressively here, right around 5,500, pretty significant level. And the last thing I thought we might do, Brent, would be to go to the peak we made on April 2. You might remember this as Liberation Day. This was ahead of the tariff announcement. And my thought was, hey, let's just do a quick Fibonacci move from that peak to our trough, to our absolute bottom. And let's see what lines up. Now, we are right in between the 61.8% retracement, Brent, and the 78. Now, for a lot of traders, if we carried today's move and traded and stayed above that 20-day or broke the downtrend line, Brent, they're going to start signaling an opportunity to get back to where we drew that initial Fibonacci from, which could be right back to about 5,700 as a potential for an extended bounce. However, even that, Brent, is still maybe counter trend to what we've been doing. But I think it presents us with opportunities, whether you want to be long or you want to be short. You've got some levels against which you can base those moves, don't you?
Yes, it's mixed. You can make the case either way, to be honest. And so, but there are levels ahead. Look, there's clear resistance levels that we may bang our head into here. But even if we get above those, then we've had this zone that we occurred through a lot of March, where a lot of trading occurred in March. And so that's why people will go, well, that's an area that people are a little more comfortable with, perhaps. And so there's certainly a chance that we kind of go in there and it becomes a little bit more channelish at that point here. But first, we got to get there. First, we got to break above those. And with the intraday volatility we've seen, right now we're up 2.8% or something like that. Would it stun me if we were actually in the negative by the end of the day? Wouldn't absolutely shock me. On a normal day, yes, it would. But given the volatility we've had, such intraday moves are not unheard of.
Yeah, I agree. We have to be prepared for these levels of moves, significant percentage moves. Again, yesterday 2.5%, currently 2.75% to the upside, significant bounce, and yet not necessarily through some levels that we would love to see achieved. So there's some comments in here that I want to address. Yeah. Elliot is stating that the change in the market is that we've really overly discounted the tariff situation, meaning simply we may have taken the market down too far, too fast. And I'll just remind us that the tariff situation, we still have too much lack of clarity. It's the lack of clarity that has left the market feeling uneasy. And even if, and I think this is a common takeaway amongst many of the pundits and talking heads that I've been paying attention to over the last couple of months, is that even if the tariff detail is negative, but if it's certain, well, at least we have something against which fundamental investors can base their decisions. Right now, that is not the case. And it's that lack of specificity, that leads to further just general broad market weakness. Okay, so pay attention to that. I think it matters. All right. Others, I see Leon's comment in here about this being a bear trap. Could that be the case? Absolutely. If you are feeling bearish about the overall sentiment of the market and you are thinking that this rally is your chance to go against the market and it continues to rally, bears could be very hurt here. And I'll bring us back, Brent, to one comment I made, the pre-show discussion. As usual, the market is interested in providing, especially in bearish sentiment, the most pain to the most investors and traders all the time. Right now, we're in the midst of more price discovery. And that means that neither bull, right, today, yes, bulls are in charge very clearly. But the uncertainty as to where we reside in the trend means that a break one way is going to hurt bears and a break the other way is going to hurt bulls. It's just a little unclear. I think the market might be, we're a bit off sides for those who are bearish. They're a bit on the wrong side today and late yesterday. The question remains, can we get continuation in this rally that will scare the bears out of their existing positions and into the long side, which will give us an incredible lift, Brent? And that could absolutely bring us back to maybe the 50-day moving average on the SPX, something like that. Your thoughts on that idea?
I completely agree. We've had the move up, and along with that, yes, the VIX is dropping a little bit. Volatilities are dropping a little bit with that move up, but we're still up at 28 on the VIX. In other words, we've moved up, but there's still so much uncertainty because there's just still so much unknown right now in the market, and that those unknowns haven't gone away to really any extent today. I mean, is there anything we know more today than we know yesterday? Really, I don't know. Maybe that the president says that we're not going to fire Powell or something. But in terms of the tariff front, there's nothing that we know today that we didn't know yesterday. So a lot of unknowns here still.
Yeah, and I think that's what is confounding to so many traders is you didn't have headlines yesterday beyond the softening rhetoric that led to the rally and led to the extended here rally today. I think that's the thing that bearish traders are saying, well, why am I getting this rally when bulls are saying, thank you, it's about time. Thanks for softening this and making this a little bit more easy to manage. And you're seeing this across the board. Brent, the level to which we've fallen on the VIX is significant. We're back under 30. We would like to see us maintain under 30. That'll give us some opportunity. This is starting to suggest that maybe some of that volatility will continue to wane. The real concern as it relates to the VIX would be a reversal. Doesn't seem as though we've got that in play at this moment. This first 20 minutes or so, 15 minutes, looking pretty darn strong here. So let's move on into the NDX here real briefly, Brent. See the exact same thing we've been talking about, the consistency in these trends above the 20-day in the NDX as well. Though, depending on your time frame, I guess it's hard to define this as a higher high just yet. Looks like we've probably got to clear this level in the vicinity right about here. and this will give bulls some reason for further optimism in the NASDAQ 100.
Yeah, so we're seeing more, it's not surprising. The index is up 3.5%. Today is, I guess we'd call it a risk-on day, right? I mean, if you look at the sectors that are outperforming today, IT is right up there, the top 2 sectors performing today.
Yep.
Along with discretionary. But so big movements here, not surprising. I mean, you can look at the implied volatility on the NASDAQ as well, VXN, for those of you, VXN:CGI, and you can see the volatility on the VIXN index is right around 32. That implies about a 2% daily move in the index expected. Right. And we're kind of in this different reality right now where a 2% move is like, oh, ho-hum almost. That's really a big move. Or, that's also about a 32% annualized move here, is what it's implying. That's a big move still. So we can talk about implied volatilities, the market settling down a little bit, but there's still a lot of volatility because there's still a lot of uncertainty. But, the general chart, I mean, almost everything we said on the S&P 500, we could apply to the NASDAQ. I mean, we still have those resistance levels. We broke above the 20. We have the higher low. We have resistance levels above us, but those are significant resistance levels. And there, that's what we said on the S&P 500 too.
Yep. It is largely the same. Reminder that we're more likely to take the stairs up, not these immense moves. And the question becomes, can we look at the short-term moves of 3, 4, 6% in 2 days and be kind of blinded to the broader trend? And that's what I want to caution against. And I'm not going to caution anybody feeling bearish at this point today, or pardon me, even feeling bullish. If you're going to take today's action and run with it, terrific. Just know the levels where you would see changes to that. Where does that shift for you? Set some ideas as to where you think we can absolutely rally to. And then, you know what? Maybe you take your shot to take a little bit of profits if you're participating to the upside. And if you're bearish and you want to take positions the other direction in the face of these rallies, well, make sure that you're allowing the buying to kind of lose steam before you start to position yourself. The same way we talk about buying lows, we want to make sure that if you're taking the bearish side, you aren't buying into the strength of the rally, or you know what I mean? Not taking short positions as the stocks are still moving up. You want to let that rally kind of start to wane and lose steam before you start to position yourself on the downside, just like we talk about with the bull side, right? So as always, know the levels you want to work with and see how price action acts around those levels so that you can dictate your next opportunity. Okay. Brent, one other thing on trade, I'm going to push us into the Russell here, but I just want to remind us about one of the commonalities as it relates to these trade discussions. These are very unlikely to be literally sewn up cleanly or put a nice little bow on it over the course of a couple of days. That is not the expectation. These are negotiations that are going to likely take many months to be completed. And the reason I'm saying that, Brent, is very simple. We're going to continue to get more conversation, more rhetoric out of the administration, out of the White House, and it's going to continue to have an impact on price action. So don't be misled. Do not think that what we have gotten today is the so-called all clear. It may result in an all clear down the road a little bit, Brent, but I just wanted to bring this up because I'm afraid that what we have is too much comfort with today's rally. And I don't want bulls to get completely offside if things get reversed kind of quickly, or if the sentiment out of the administration were to change.
Let me just add one thing, Kevin, and that is on that RSI at the bottom. It is interesting. Yeah. We have broken above that trend there. Here we're on the RUT.
Yep.
And so, for what it's worth, and certainly most traders aren't going to use the RSI as a loan indicator, but it is a break above, and that would be, that's a nice kind of a more positive indication on the market.
Yeah, It's a real nice development for the RUT, no doubt. I mean, we haven't been above the 20 days since we were here in late March. And of course, that, as Wiley pointed out for us here, you could employ some semblance of the Horner rule, and you may have stayed maybe out of the Russell, or may have decided to look for more confirmation of the Russell staying above the 20-day here. It didn't hold, and we made lower lows, of course. And that's kind of where we are right now. 1 day above the 20-day might not be sufficient for some of you trend traders. Some of you might want to look for a second or third consecutive close here. But obviously, the other area that I could kind of go back to from the spot where we've basically been making a bit of a downtrend for a while. If you draw it from the peak, and you want these lines, you could look at it like so. You could also draw one from right about here and just try to capture these lows, in which case everything happening right now is also right at a trend line. So yeah, we've got an improvement with the RUT. Nice to see the RSI making new short-term highs, but I will point out, Brent, that level is still only 51, which means that we are in the vicinity of overbought conditions in a bearish market. Meaning if we stay within 50 to 55 on the RSI and then see this roll over, that would be indicative of further bearish market behavior. So that bears watching as well. I have a feeling, Brent, that we're getting this pop in the Russell to be a little bit extended to the 4% level based on this brief respite in the buying of the Russell, or the 10-year note here. Notice that we're settling in around 4.3. We've gotten kind of accustomed here to a little bit of a higher for longer concept as it relates to rates, though.
Yes, I would agree with that. I think the jump about 2-3 weeks ago, the big jump in rates that we had a couple of weeks ago, maybe caught some people off guard, and initially it was kind of a shock to the system, and it certainly may have hurt the markets a little bit. But by now we're kind of going, oh well, that's just the new world we're in right now. So the drop is nice, and we'll see. There tends to be some correlation between the trajectory of the 10-year and like mortgage rates. Mortgage rates have gone up, and so hopefully they drop a little bit with if this settles down a little bit. And but we are kind of in this range of the 4.2, 4.3 range seems to be an area where we're just in. The dropping below 4 was more of an anomaly, it appears right now.
I'm just going to do some basic, again, I like to talk technical analysis 101 stuff, Brent. We are still above the downtrend line. And that means that everything that's occurred since is more valid than it is not at this point. So I bring that up because the fact that we've stayed above the downtrend line and have tested it a couple of times here may mean, again, still higher rates. The truth is the administration wants to see rates coming down much quicker. It's one of the reasons that in the last couple of weeks, not yesterday notwithstanding, we've heard pressure towards Mr. Powell because they want to see some action here, but just not necessarily forced action. The overall market could bring rates lower, I suppose, but right now the action seems to suggest that maybe 4.2 is a level we're apt to maintain here. I think that gives us something to monitor in the short run on the 10-year yield here. What about what's going on with the semis? Semis are getting a nice little bounce here, 5.5%. Yeah. We like that. I'm going to eliminate my uptrend line just for a brief moment here to kind of highlight where we are. Again, above the 20-day, still in a pretty distinct downtrend here, Brent. And again, at and above it, but is 1 day sufficient, Brent? I mean, again, I know there are many traders who are going to say, this is my shot. I'm going to go long. We're above the 20-day, and yet you might not have confirmation to do so.
Yeah, for most traders, 1 day is not sufficient. To answer your question directly there, we're going to see more volatility out of the stocks typically than, it's like this hierarchy of volatility in a sense of the stocks, and then, the IT, NASDAQ, and then, the market, the S&P 500 as a whole, and whatnot. The stocks is, when the market's going well, the stocks more often than not is probably going to outperform the market. And when the market's been going down, it's more likely not going to underperform the market. But this is, I don't think a lot of people have confidence at this point that this is a trend change here in this. Although, we'll take a 5% gain during a day. That's a nice thing. And of course, there's news that, comes out that affects the stocks. Intel's, I don't know how they're doing today, but they announced they're going to lay off 20% or something of their staff. So individual companies can certainly affect the stocks, but as a whole, in general, the SOX is going to just be a more volatile index that we'd love to see lead the market up, but there's just no indication right now outside of a one-day move that it's doing so.
Yeah, you're right. In fact, I'm looking at that headline. I've got about 20 minutes to go. We probably won't stick entirely in stocks in the news, but let's bring up Intel because the chart of Intel is kind of notable in the sense that we've been very range bound for quite a while here. Down to around, what is that, about 18 or so, and our up level around 26. Pretty wide range, as you can see, everybody. And as you stated, Brent, the news is that they're set to unveil plans to slash more than 20% of their workforce. The move is set to streamline operations, of course, reduce bureaucratic inefficiencies, and that's all according to Bloomberg this morning, so citing people familiar with the matter. Part of a broader strategy to refocus on an engineering-driven culture. That all sounds really favorable for the firm, and yet, it's a good move today, 5.5%, but not a trend shift just yet. So perhaps here we're going to maybe see some kind of trend shift, but if you're a bullish trader, you might use a catalyst like this as a means of setting up an opportunity to trade to the top of the range. But I think it's always difficult, Brent, when if you're trying to be a trend trader and you don't see a trend other than sideways, it can be a little bit tricky from that standpoint to trade it. Any additional thoughts here on Intel specifically?
Pull out to like a 3-year chart on Intel just to kind of see how ugly it has been. Intel, there's a 10-year. So Intel has been, it's just been terrible. The stock price has been, but you can see of late, we have been more in this channel, I guess. So that's that's kind of a significant resistance area, just above 25 there, maybe 25, 26.
Yep.
And when we've gone, and that's still a little ways away from where we're at. I mean, that's 20-30% above where we're at right now. So it would take a little bit to get there, but until it breaks there, I think a lot of traders will be a little bit skeptical, maybe, because they've seen it before. In Intel, look, we've seen this. I've experienced this in my life on stocks that I'm like, I have this idea of like, oh, it's got to turn around. It's been beaten up so much, and so I've looked to jump in or something like that, and it's a fake out. And so it's the whole trick me once, shame on you. Trick me twice, shame on me. Once you've been burned enough on that, you're a little bit more hesitant to get back in.
It's true. I always try to remind myself that the stock doesn't care when or how I bought it or what my position is or my entrance cost basis. None of that stuff. The stock and the people that trade it besides me don't care. So try not to assign emotion to something that has no emotion. That'll help you out a little bit. I think if you were looking at this from a technical setup standpoint, one thing that stands out is the potential proper risk versus reward. If we just looked at the low at 1767 and the current trade at 2070, $3 of downside risk in theory for potential to get to 26 would be $3 of risk for $6 of upside, $1 of risk, $2 of upside. So a pretty close 1 to 2 risk reward ratio. Nothing wrong with that for many traders. Additionally, though, Brent, I can't help but I called it out with my rectangle down below. There's a lot of volume down there over the last 9 months. And the reason I bring that up is that is significantly different than volume that we saw even in the biggest selling when we went from 50 down to 20. That is kind of notable. This has the potential makeup of an accumulation window where long range investors might just be piling into Intel to hold for a longer term. Your thoughts on that?
Yeah, I mean, at a certain point, the stock gets beaten up enough that the valuations, even if some of the fundamentals aren't great, the valuations become attractive enough that you get long-term buyers just buying shares, and that can be a sign of a turnaround. And by the way, that on the flip side, that's true too. Increased volume can be a sign of a potential change in things, and it doesn't mean it's immediate or anything, but we have seen that volume increase. So that's a good call out there, Kevin, on that one.
Thanks, appreciate that. I had to also noted here, Grumpy Gene was just asking for a little clarification on the Horner rule. I thought we could do that. I'm going to shift us over, since we were talking semiconductors. I thought we could look at the move that NVIDIA has made here real briefly, everybody, and just talk quickly around the 20-day moving average has been resistance for us, and why something like the Horner rule can be helpful to traders as a confirmatory viewpoint. And I'll just reiterate what the Horner rule is. What we call the Horner rule is really just an encouragement to have a plan and to create what you consider to be validation or confirmation of breakouts or breakdowns, as an example. And so one of those would be looking at what we have in NVIDIA, for example, where we have previously traded above the 20-day moving average for brief periods of time, but have not been able to hold them. Now, by my definition of the so-called Horner rule, it's just looking for 3 consecutive closes above what a trader has deemed to be resistance to suggest that resistance is actually broken. And as you can see here, we had 2 days, and day 3 we were back below it. Here we had 1 day above it, 2 days below, 2 days above it, right back below. The point is simple. I'm not suggesting you need 3 days. What I am suggesting is that you, the trader, need to define what it is that validates your breakout confirmation, right? Is it 2 days closing in a row above it? Is it only 1 day? Do you want a week? Are you even looking at a weekly chart and not even paying attention to the daily chart? Give yourself a plan as to how you wish to put your money to work and where you're going to press and invest more dollars because you're more confident, or where you're going to pull those dollars from the market because you are less confident. It's nothing more than having a plan that you can refer to frequently in the moment and make decisions speedily and quickly without haste. And that's the big thing, isn't it, Brent? Not making decisions, hastily. That's really hard to do.
Emotions are your biggest enemy as a trader. Fear and greed, we talk about, and both of those can certainly be, can certainly, they can certainly affect, but I would say probably more often than not, they negatively affect. And that's why, and this is something we talk about a fair amount, but is you have your plan ahead of time before you trade so that you don't get confronted with a day where you see the market's up 2-3% or whatever. And I'm not saying the market's not going to go up from here. All I'm saying is, just because the market's up doesn't mean you pile in and you, or vice versa. If the market's down, you don't necessarily sell everything here. If you plan ahead and say, these are the conditions I'm going to get in at, or these are the conditions I'm going to get out at, it doesn't mean you're going to be right. I mean, it may not be the ideal time to get in. It probably won't be the ideal time. The odds of getting in at the exact perfect time are slim, or getting out at the exact perfect time are slim. But what it does is it takes the emotion out, because you're pre-planning your escape route, so to speak, or your entryway ahead of time, when you're not filled with greed or fear. Can't get that out of my mouth. And that provides for more consistent application of your rules. And that's really the best you can do, folks, because you know what? Nobody has perfect rules. And if you do, they're not going to be there for long, because the market changes. And what happens this time isn't going to happen next time. So all you can do is just be consistent with logical, well thought through rules, and do your best with that.
I'm not sure I could have said it any better than that, Brent. That's a nice way of putting it. Thank you so much for providing a little extra context and color for our viewers. We talk about it so frequently here in Trader Talk, but it's never a bad idea to reiterate, because we don't know how many of you are new. Maybe you're here for the first time. We want to have these same conversations frequently because watching the market every day is one thing, but conceiving of how you're going to place your trades and then following through and following your own plan and defining it all the way, that's really a process that takes many, many, many years. It's not something to imagine that happens overnight. And it's also why we talk so frequently about the idea that the learning never stops. It's just an ongoing process. There is no goal line to cross here. We're just trying to get better every single day that we are trading. So with that, let's move on to some other ones here, Brent. We had, I thought another one this morning that was notable, I actually spoke about this briefly this morning, was Kava. Kava got upgraded today. Let's take a quick look at this chart. They got upgraded at Bernstein to outperform from market perform. And, the reason I brought this one up was because there's been a bit of a range in here, Brent. And you know what? It's trading suddenly to the top of the range. Yeah. And it's actually a pretty deep range. It's 20 points. If we looked at about, say, let's call it 18 on the low end. How about that? We have this real lengthy candle there. But Brent, if you get a breakout, just from a trade management standpoint, when you're looking at this could potentially be that opportunity to run to the 200-day moving average, perhaps.
Yeah, yes. And so let's talk about this from a trader's standpoint here, Kevin. If you were bullish, and that's an if you wanted to trade, if you were coming to the conclusion that, hey, this seems like a logical place to consider it if it breaks out. Well, this would be an application. We can go back to the Horner rule and we could say, well, hey, we want this 3 days above. So you can do a time duration above it, or you can also just say, well, it needs to go up, 1% above it or 2% above it or some amount, not a time duration above it, and use that as a potential entry. So there's different ways to do it. But the good thing is, if you use that resistance as a point, as a new potential support, then your stop loss that you are likely to put in, stops aren't guaranteed, can be below that old resistance and our new support. And at that point, we have a fairly tight stop level. And as you mentioned, the target can be quite a ways up there. That gives you a nice positive reward to risk ratio on that trade. If you want to automate a trade to get in, you can do it with a buy stop order if you want ahead of time. And so you don't have to watch it each day or whatever. You can just automate that order if you wanted to.
Yeah, those are popular for the trader who might be a little bit more aggressive or maybe a little bit more, in their own eyes, comfortable and confident in buying intraday breakouts. We speak so much here about closing prices carrying more value than intraday breakouts. And there's a reason for that, everybody. That's because the close matters more than intraday, especially if you move through a major resistance level and then manage to come back below it. Let's say, we had this candle, and, each one of these we've seen have been, good closing levels necessarily, and yet we still got pushed back. That's why traders look for closes over resistance, because it can give them that validation. So Brent, a buy stop might make sense for some traders because they want to buy as it's moving through resistance and capture it as it starts to run and carry momentum to the upside. The big reminder, as you called out, I'm just going to reiterate it for our viewers and for our compliance, of course, is that when we place a buy stop, it is a trigger price that we set. And then once triggered, we buy at market, which means we have no access to defining that price. That means that we will pay whatever the price is when we buy. That might not be ideal for some of us, and you might have some considerations. If you're not familiar or comfortable with stop orders or buy stops, buy stop limits, etc., it's a prime reason to give us a call and chat with a broker on the phone. That's why we're here 24/7 for you. So never hesitate to do that, everybody. This was interesting, though. Again, upgrade today, potential catalyst, trading to the top of its range that we've seen over the last couple of months. Not yet breaking out, but it might be a watch list position, Brent, for that reason.
Yeah, it sure could be. And if you are one who uses something akin to the hoarder or whatever that is, then yeah, you probably wouldn't just do a buy stop there to get in at a certain price. But if add it to a watch list, and then you can look, and then a couple days down the road, if it's broken above and it's still above that, then you can look at it closer at that point.
So let's move on to another one in the news this morning is Tesla, which reported after the bell yesterday. They are up a bit today, a nice 4% pop. I'm going to pull back the chart a little bit. Let me eliminate this line here, and let's just talk about what we've seen in the way of price action as we've defined an area of support in the ballpark of 220 here. But, Brent, even though it's up today by 4%, this has the making or the feel that it's up because of the overall market sentiment rather than itself, because Wells Fargo is noting that the Q1 EPS missed a consensus, operating margins 5%, missing the IR consensus of 6.1%. Piper Sandler believes the best case scenario for Tesla has materialized based on the Q1 report. Benchmark analysts are noting that Tesla's current market outlook is clouded even still as this industry continues to navigate the tariffs. So it seems like, Brent, no matter how we look at it, yes, it's up, and yet the report itself wasn't necessarily fantastic.
Yes, and that I agree, but maybe that's a bullish sign in a sense, in that when you get kind of not great news and the market does, and the stock doesn't go down, sell off on it, it may be just be saying, look, this is we're at 50% of the price that we were at approximately, a few months ago. This is a much cheaper valuation. And so that's why maybe people are looking to possibly get in here. The market, it is up. What are we at? 4.8% on this. The NASDAQ as a whole is up about 3.8% right now. So it is a little more than the NASDAQ. I guess Elon has said that next month, I think he said he's going to be spending a lot more time with Tesla and less time with governmental stuff, Doge stuff. Yeah. And maybe that's a positive as well for it. We'll see. We'll see.
We will. I will point out there is a rising RSI that a lot of traders will suggest is bullish, that perhaps the lows at 220 are validated by that rising RSI. Take that for what it's worth. Obviously, moves under 220 get decidedly negative, and I should point out that it was Wells Fargo's note about missing Q1 earnings per share. The firm maintains an underweight rating on Tesla, and they have a price target at 130. And again, price targets, we know these are just estimations, and obviously Wells Fargo is not terribly bullish on Tesla based on that potential price target. That would be a pretty egregious move if that were to occur. So just a final reminder. The other thing that I just want to touch on, again, I love the chat here because you guys all drive this chat so well. The conversation between each of you and on an ongoing basis, I love to keep an eye on it and bring your commentary in here. But I'm gonna stand on a little bit of a soapbox here briefly and just point out, look, I've been a Schwabi for a long time, 1997, and I've seen many shifts in our approach to how we do business at the firm. And yet, the one thing that I can state unequivocally is that Schwab has always been on the side of the smaller investor, the trader who wants to learn. And some of those comments about Schwab wanting to maybe charge more and on commissions and whatnot, the reality is our goal since I've been at Schwab has always been to make trading and investing demystified for the average individual and make it more affordable for all who wish to participate. And that's something that I have absolutely witnessed the evidence of, dating all the way back into the 70s with the advent of the mutual fund marketplace, and then getting online and dropping commissions down to, at the time, what was an enormous drop to $29.95 to place your trades online, and now to be able to trade the majority of equities and ETFs in the marketplace at no commission, and now to only charge a contract fee. I mean, to suggest that Schwab is anything other than in the eye out there for the as a proponent of the small investor, the average retail investor like all of us, I think that that's a miss. So I just wanted to state that. I saw a lot of comments about it. My only point is we are here to help out. We are here to educate and provide whatever it is you're looking for from your broker. And my hope is that you all recognize that with an open mind and come to the table. Let us know what it is you need from us as a broker for you. And that's what we will do. We will drive you to the area that will benefit you greatest, what you're looking for. So I'm off my soapbox. That's enough of it for now. Brent, anything you'd like to say to wrap us up here today?
I think you said it well, Kevin. So I'm going to leave it there. I hope everybody has a wonderful day ahead. And yeah, great being on with you here today, Kevin.
Always love having you, Brent. Wednesdays are fantastic. Thank you so much for being here, everybody. Big thanks to Barb, of course, in the chat. Please take a minute and follow the three of us on X. And if you like today's conversation, hit that thumbs up button down below for us as well. That'll help us out as we get this ready to go in the archive for other viewers who could not be here live today. So with that, thanks for being here, everybody. Hope you all have a fantastic Wednesday. We look forward to seeing you all again real soon.